Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about the quarterly results for Alibaba. Charlie Munger, Michael Burry bought more. We're going to talk about their earnings and why I still think it might be one of the best investments available in the market right now. Get into it.
Two Super Guys Trade Stocks.
All right. So they reported their earnings this week, and this is for their full year 2023. Their calendar is offset. But we also had the news this week that Michael Burry basically doubled his Alibaba shareholdings in the most recent 13F filing.
Yeah, and
so
bought JD.
He's been buying. Yeah. And JD as well. And then Munger has been holding steady for the last couple of quarters here. Personally, I've been kind of holding steady. Now, as far as the market goes and what it thought about the earnings came out pre-market, and market wasn't really too happy about what they had to say, I guess. What do you think?
Was this them specifically? Because so I was day trading that morning, and every single Chinese stock was down, like all of them.
Okay.
So I didn't know if it was a market thing or not.
I didn't put a specific comparison in here for like another kind of Chinese tech stock. But yeah, interesting thought from that standpoint, whether or not it was more macro. But I want to talk about them individually as far as like, what the headlines were about this quarterly, report here. So the main kind of point that you see a lot of news media pick up here is that they're going to be splitting up the company more and more. They're
Right.
announcing multiple IPOs for different sections of the company. And overall, the top of the line rolls 2%. Not great. Now, Alibaba did give some color in terms of how the quarter evolved, if you will, saying that they were down initially for the first couple months of the quarter, but then by March they were basically back positive. And we also had kind of data as far as Chinese consumer spending that was up like 15% in April. So I think the next quarter should be better for them as
Right.
far as like a top line revenue growth perspective. But they were still able to turn in a little paltry 2% growth year over year. Not great, but not horrible.
It's not bad if they were negative for the first 2 months.
Yeah, exactly. Now, this is a 2% year over year. They actually have both the year ended numbers and the 3 months ended here. The cool thing you're seeing here is look at all these other segments. Although there are smaller portions of revenue here in the single digits, all these other units are growing, mid-teens or even high 20% as far as like growth rates.
Yeah.
So one of the goals of management to unlock value for shareholders is to try to unleash these smaller subsidiaries a little bit. And the way you kind of capitalize on that is by having them be their own standalone units, right? As far as adding to the sum of valuation part, for Alibaba entity, Alibaba Holding Group, right?
It is funny because like if you had told me the sections of business, I would have said in America, cloud would have grown the most, but that one grew the least. It lost
Yeah,
2%.
there's a separate thing about cloud I kind of want to mention. We'll get to it when we talk about that second individually. This is just kind of looking at their overall cost structure. Basically, they haven't gotten anything crazy as far as like bloat, right? Is the point here? They've been able to control costs pretty well. The only one real notable here I thought was the sales and marketing was down 2%, like year over year. So able to control their expenses there a little bit, investing a little bit more in general administrative, and then also like when you look at the R&D, that was roughly flat, I would say, basically compared to last year. Nothing too crazy there.
Okay.
Now, this is, in my opinion, the sexiest thing about Alibaba Group.
Ooh, all right.
Yeah, it's all about cash flow. Yeah. Year ended $29 billion in cash flow, right? In terms of free cash flow, after they've put their money back into the business in terms of keeping it running, you're still talking about $25 billion. That's this guy right here in free cash flow. Sexy,
I'm
right?
gonna look up their market cap because I don't remember it.
Yeah, it comes up in the end. Don't worry, Dylan. I actually did that math
Oh,
already for you.
okay. Thank you.
Yeah, exactly. So share repurchase. Now, this has kind of been something that I would really like to see them be far more aggressive with. They only bought back like $1.9 billion in shares in the almost recent quarter. That's pretty pathetic for a company that has a positive net cash position here of, look at that sexy number, 58 billion USD. Yeah.
Yeah, that doesn't make me feel warm inside because I know that they extended how much they were willing to buy. So you would think if they're very happy with their business, they would buy at these what they would consider low prices, but they're not.
I completely agree. Okay, where I'm going to get into a little bit more a little bit later on. This is another one I thought that was kind of interesting and a little sexy here. So they're looking at the change in EBITDA. EBITDA is bullshit earnings, right? That's what it basically represents. So it's earnings before interest, tax, depreciation, and amortization, which are real expenses. But what they're trying to do here is highlight the profitability of each segment, right? Although these segments are ultimately most of them are still money losers here, exception of cloud and China commerce. If you look at the actual EBITDA margin year over year change, they're having positive growth as far as the EBITDA margin across their entire business sector.
Okay. Yeah, that's
Huh,
pretty dope.
that is pretty
I mean,
dope.
that's great.
Yeah, I can't get too mad at that. So this is where we're talking about share repurchases a little bit more. Like I said, they bought back. I say it was 1.9 billion right here
Right.
in the share repurchase program in the most recent quarter. They still have 19.4 billion
Yeah.
authorized under the current.
What the hell? Because it's
Yeah,
until March 2025. That's literally 23, 22 months from now. So
yeah,
why
and
wouldn't they? Why do they only do 2 billion?
I don't know. I don't know. It looks like they may have some kind of bigger things in the work though. This next section down here, I think is kind of interesting. This capital management committee. They basically have formed a new committee on their board that's going to look at the way they should be redeploying this capital back to shareholders. So board of directors have formed a new capital management committee to undertake a comprehensive capital management plan to enhance shareholder value. All right. So that's what their goal is try to deliver this money back to shareholders some way. The committee will review and decide important matters relating to Alibaba Group's activities as a holding company, including capital market transactions. That okay, that's they need to borrow more or IPO and those sort of things.
Mm-hmm.
Shareholder return initiatives and subsidiary equity initiative plans, or incentive plans. Sorry, fundraisings, IPOs, and spinoffs. So they really are in a transition period where they're trying to figure out how to take their cash pile and all these other subsidiaries and arrange them in a way that delivers the most value for us Alibaba shareholders.
Yeah. So they have a committee to maximize efficiency,
Exactly.
essentially.
They have that $58 billion in positive net cash. They have all these multiple units that have some of them very, very large, growth rates of 29% for the logistics group not that long ago. They're trying to figure out how they should arrange themselves in terms of delivering this shareholder value. Okay. So this is some of the plans here. And I wanted to give you my little take on these. So, as far as spinning off Alibaba Cloud, now, this is Dan Ives, he's an analyst here, saying there's a no-brainer strategic move, and he believes that some of the parts valuation of Baba is that the cloud would be more valuable as an independent unit and add more to the overall ownership stake for Alibaba shareholders. Now, there is one thing that has been troubling me with cloud for a while. There is this rumor that ByteDance had to transition away from them, from a TikTok perspective. However, they have yet to say exactly when that kind of transition period will be over. That they're decelerating in terms of their usage by TikTok and ByteDance, but they haven't given us an idea when we can expect to return Alibaba Cloud to actual growth because they won't have this overhang of a large customer that's been slowly transitioning off platform. That's what I think has been staggering these Alibaba Cloud numbers for the last year and a half.
And that's probably gonna accelerate. Didn't Montana just ban TikTok? They're like the first state, right?
They did, yeah, just this week. Yeah, that was pretty interesting news. I haven't looked into the details of that,
Me
but
neither.
it's interesting, I would say, in terms of the fact that you now have multiple, or kind of someone actually finally put the boot to the ground. All right, that's what I'm trying to say. In terms of their other platforms, Lazada and AliExpress, they're talking about maybe raising money outside of their current Alibaba capital management, which I don't know how I felt about that. They have $58 billion in positive net cash. And if they truly thought this was going to be a lucrative investment, why are they not doing it entirely internally, rather than taking out outside capital?
I don't know because they have so much cash. They have a significant amount of cash. You haven't showed the slide yet, but I'm gonna guess they said 58 billion. I'm gonna guess they're at least 25-30% cash, their market cap.
Oh, yeah, that's coming up here in a minute.
Okay.
Yeah,
Because
we'll
I
see.
mean, I don't know why they don't do that either. That's weird.
Yeah, I didn't love that. And the actual growth rate here for Lazada is pretty solid. Same thing with the K-Now Logistics. They currently own 67% of the whole company, and they are planning to IPO this. That makes sense. This is a unit with that 29% growth rate. Just
Right.
smoking hot numbers. I can imagine that the valuation would be significantly larger outside of Alibaba than within Alibaba. So it makes sense that it would be kind of lucrative for Alibaba shareholders. And then there's other one, the Fresh Hippo, whether or not they're going to list that as an individual IPO. I didn't see any individual growth rates on Fresh Hippo. I know it's a grocery chain. I don't know like how large this would be. So I kind of left that one as like a neutral. Like I don't really know if this matters or not. But it's interesting as far as their overall plan, as far as making value back to shareholders.
Yeah, the IPOs of all the different segments are going to get real fun the next 2 years.
Yeah, exactly. So this is my fun with numbers slide here.
Okay.
We're talking about $217 billion market cap as it closed on Friday. $58 billion net cash position. That gives you $159 billion enterprise value. They made $25 billion in trailing 12-month free cash flow. It's a 15.7% free cash flow yield. Yeah.
Yeah, so that's disgusting. Here's the most important thing, the most important analysis that you didn't say, right? And that is Michael Burry is invested, and he's super early. So that means we're going to get no gains for a year because he's notoriously incredibly early. It's very important.
Yep. That's okay with me. I've gone back to my stupid, complete and utter moronic, covered call system. So I've been doing that again because I can't stay away. I'm like a moth to a flame. The theta decay just attracts me in, and then I burn to my death. That's how it works.
Are you positive on that? I'm so afraid it's just Baba because it trades 20 hours a day. I don't do cover calls on that.
Yeah, so I roll one. Overall, I'm not really sure. I think I am positive, but I'm not entirely sure. I can't back that up with numbers. I probably should have tracked this individually. I can tell you that I'm still outperforming the SPY by more than I think 8 or 10% this year. So so far so good.
All right, guys. Let us know what you think. Have a good one.
Catch you next one.